I call the member for Wright.
Thank you, Madam Deputy Chair. And I rise to speak today in relation to the Clean Energy Finance Corporation Bill 2012, the Clean Energy Legislation Amendment 2012 and the Clean Energy Customs Tariff Amendment Bill 2012 and the Clean Energy Excise Tariff Legislation Amendment 2012. Madam Deputy Speaker, once again the government has sought to mislead the Australian people, and I speak on behalf of the people of my electorate of Wright, who I represent, because I aim to make every effort to ensure that they are made aware of the inherent deception and the perpetual action by the Gillard government. The carbon tax was legislated in 2010 in a package of 13 bills, a $23 tonne tax rising at 2.5% per year in real terms, to be replaced by an emission trading scheme for July 2015. Mr Deputy Speaker, with reference to the trading price, the floor price on that will come in at $15 and it will take us through to the year 2018. Treasury's own modelling tells us that by the year 2020 that the carbon price will be at $37. Madam Deputy Speaker, I bring to the House's attention that I believe that the global price for carbon today is around $4.50. However, may I remind you that the Clean Energy Finance Corporation Bill was not part of this package and been introduced as a standalone piece of legislation. The bill establishes the Board of Clean Energy Finance Corporation, giving a statutory responsibility for decision-making and management of the corporation's investments. Madam Deputy Chair, as a Parliament, we have a duty of care to appropriate funds diligently. The vertical integration of funds, how they'll travel through this organisation, will be that the government will go to the market and raise money from the bond market, and that will in turn be given to the CEFC, and then from there that will go on and fund projects. The government tell us that the returns from those investments will then be reinvested back into the CEFC. I want to bring the Parliament's attention to the potential make-up of the CEFC and the boards and the directors, and draw the analogy that because the Finance Corporation is an off the government books investment, not that dissimilar to the NBN, the remuneration packages that are potentially available for the directors of this organisation, it's not beyond the realms of possibility that the remuneration packages could be that similar to the NBN. And for those of you that may not be aware of what those packages are, the number one bloke in the NBN is on a salary package of about $2 million a year, which I think is outrageous. And that there are eight. I'm a starter too, if I could get the gig. There's another eight non-executives on around an average of $818,000. Now, Madam Deputy Speaker, when we start looking at remuneration packages of $2 million and an average of $818,000, I take real offence at as to what we pay, the office of Prime Minister, irrespective of whether or not we believe she's doing a good job or not. It makes a mockery that we've got basically an organisation running a budget of $10 billion as opposed to the economy. It just makes a mockery of that process. I draw to the Parliament's attention a situation that happened in Queensland, which also troubles me, which we could draw an analogy from this organisation. About 5 months before the recent state election, the Queensland Racing Board up there took it upon themselves to renew their contracts for 5 years. And in that contract term, they wrote up that in the event that they were disbanded as a board, that they'd be given their golden handshake and that the 5-year term would be fully remunerated. I have concerns that when we're setting up or going to the market looking for potential directors or people to head up the CEFC, that the income coming into that organisation will be over a 5-year period of $2 billion lot. So you'll get $2 billion in the first year, $2 billion in the second year, through to the 5th year, which is a total of $10 billion. I would be absolutely horrified if we were signing up directors with the intent that they were going to do the full 5 years on potential salary packages of $2 million, or at the minimum $818,000 if we use the contrast from the NBN remuneration package, because we are on the public record as a coalition that we will rescind the carbon tax. So this organisation will then be disbanded. The revenue streams that will come in will be in the first year at $2 billion. I would encourage the government, when they go into the market looking to these plays, not to embarrass itself and not to embarrass those directors by locking them into 5-year contracts, because we will shut this show down. We will shut this show down, and I do not want to be putting my hand into the coffers of hard tax-paying men and women of Australia to pay out potentially a $2 million director's fee over 5 years, $10 million for 1 year's work, something that may have been overlooked in the consideration. And how could that have been overlooked? Well, maybe when we go to have a look at the 2.5 hours consideration that we were given at the Economics Committee, when witnesses were called or to give evidence, Madam Deputy Speaker, I just make the point that there was not physically enough time to trial the complete due diligence of this process that it deserved. During the inquiry, we were told overwhelmingly that there was extensive consultation. Well, I put it to this House, with the extensive consultation that was supposedly undertaken by expert panels, they have forgotten to ask one group of people whether or not they wanted the carbon tax, and that is the Australian people. The Australian people were not asked if they wanted to sign up to the carbon tax, because we go back, to the couple of days before the last election where this Prime Minister, and it is the Achilles heel, it is the Achilles heels of this government, when the Prime Minister stood in front of the camera, looked down the barrel of it and said, there will be no carbon tax under a government I lead. Now, why was that statement made? Because we all watched the polls. We all know how the polling was going. The polling was heading on a downward trajectory. It was a very close election. That single comment turned the election phase around. It turned it around. You know why? Because the people of Australia trusted this Prime Minister. History has now shown that you cannot trust this Prime Minister. So with reference to remuneration and that for directors of the new CEFC, I send a very blunt message to the government. I send a very blunt message to those people that will be outsourcing those people. Do not sign up anyone on 5-year contracts, because we have made it perfectly clear that we will be dismantling this when in government. The bill gives the Carbon Energy Finance Corporation the power to invest in projects for the development of Australian-based renewable energy technologies, low emissions technologies and energy-efficient projects, the power to enter and to invest in agreements itself and to make investments through subsidies, and to a duty to ensure that as of 1st of July 2018, that half the funds invested at the time of the purpose of this investment function are invested in renewable energy technologies. Madam Deputy Speaker, I also raised the point on the back of that comment that the market that this organisation will be potentially funding will be some sub-economic projects. They are projects that the commercial market has not found within themselves to have a suitable risk rating to fund, to ensure shareholders' funds of banks or of merchants to invest in these projects. The risk rating on these are just too high, and I understand that is the whole concept of this body of funds, to go and try and attract those higher risk organisations. But with that comes a risk factor, and when we had the opportunity to question Treasury and the Climate Change Authority with reference to the risk factor, they were rather oblivious. Whilst they had some provision in there for risk, I would, coming from a commercial background myself, and having access to the number of businesses since 2007 that have exited this market, I think it is timely that as an opposition we put under the microscope what the return on the investment will this be. The bill also sets out that the Carbon Energy Finance Corporation special account with appropriate funds to the Carbon Energy Finance Corporation special account, which totals $2 billion per annum over 5 years, with the first instalment due to be paid on 1st of July 2013, and each subsequent year after that a total of $10 billion, to a total investment of $10 billion. And has the purpose of making payments to the Carbon Energy Finance to the Australian Renewable Energy Agency. Now, the Carbon Energy Finance Corporation, intended to be self-sustaining once it matures, and therefore any funds returned to the Carbon Energy Finance Corporation for its investment will be available for reinvestment. Again, I reiterate the fact that if you're borrowing money out of the bond market for, say, 3 to 4%, the government then hands that on to the CEFC, who invest in the projects. I would suggest that when R&D doesn't give you an enormous return on investment. I'm suggesting that just by the pure makeup of the vertical integration of how this has been set up, I don't see a lot of return on investment coming back out of that market. I may be proven wrong. Go your hardest, but I mean, what we've been told with reference to this is that there will be a return on investment. My point here on the House is I would suggest that will be limited. In fact, however, the government's own bill already envisages a loss to the taxpayers through this investment through operating costs and write-downs, or what we would call failed projects, as set out in the fiscal impacts. With reference to return on investment, I think they're looking to write off around forecasted amounts of up to $600 million. Now, in the electorate of Wright, where we were devastated with the recent floods up there, I could do a lot with $600 million. I mean, that'd go part of the way to taking a lot of the pressure off my Toowoomba Range crossing. It would have gone a long way to rebuilding the communities of Lockyer Valley, Murphy's Creek, Grantham and surrounding communities, Mount Sylvia, telecommunications network that was destroyed just to get back to where we were. So $600 million seems a big gamble and a big punt. Now, it would seem that spending $10 billion on renewable energy would get you something. What is proposed here is that the government will spend $10 billion and therefore will be generating some form of new renewable energy. The problem is, however, that before this bill there was a 20% renewable target, and then after the $20 billion included in this bill spent, there will still only be a 20% renewable market. We make the point that we believe that the market, if we would have worked cooperatively with the market, with those who are already at commercial stage, to co-invest with those guys, that we could have met our objectives far greater rather than pursuing high-risk, low economic programs. Mr Deputy Speaker, the bill is economically irresponsible and it's unlikely to achieve its stated aims. I hope for the government's sake that it does reach its aims. I really genuinely do. It is an enormous amount of money. It is an enormous amount of money. But I suggest, from a commercial background that I come from, there are not many of the dots that are lining up on this project, and I say that with all sincerity. And I say this because not only is the carbon tax a bad piece of policy, and it's a product of an unprecedented deceit impost on the Australian people, this is the money that comes from working teachers, carpenters, farmers and nurses from my electorate of Wright. People who are working each and every day to pay their taxes, and their money will be wasted on this. Their money will be wasted. I want to bring also, just in closing, to the attention of the House, recent comments from Twiggy Forrest, who gave a recent address at the National Press Club. And he likened the government's handling of the carbon tax to that of, not too dissimilar, to a couple of blokes buying a Melbourne Cup racehorse that had the potential to make them millions and millions and millions of dollars. But rather than racing a horse for the second time to get their dividend, they celebrated after the first race by actually eating the horse. I mean, they were the words that come from Twiggy. Now, yeah, he's got an invested interest in the mining resources sector, but it was interesting to use that analogy of the government's handling of funds. Now, the government is going to say about how successful they are and how successful this tax is going to be. But let me remind you, Mr Deputy Speaker, that the coalition that created and developed implemented the mandatory renewable energy target successfully. It was the coalition which created, developed and implemented the then equivalent to the solar PV rebate, and it was the coalition which created and developed and implemented the solar hot water rebate successfully. We are proven when it comes to handling the commercial and the financial decisions of this government. The majority of us on this side come from business backgrounds. We come from places where balance sheets are a basic principle of how we make decisions on a daily basis. When we make a wrong decision, it hurts us in our pockets. So we're a lot more diligent when it comes to making decisions on behalf of the nation and when it comes to spending other people's money. I'd suggest that the same skill set isn't on the other side of politics of this Labor government. In closing, I draw on the previous leader of the Liberal Party, John Howard, who said one of the problems with the Australian Labor Party is that they have a very shallow gene pool.